Hey guys, it's Ryan. Welcome to a futures breakdown. It's going to be April the 15th. It's Monday. We're going to do a breakdown of the whole market, including the futures. So getting straight into it, this is going to be the S&P 500. As you can see, we are really close to nearing the absolute highs of the stock market. This is going to be the 180-day 4-hour. We got a couple different lines here. This is going to be the 200 moving average. As you can see, we've reached a bounce here. We got close to reaching a bounce here. This orange line here I have as the 50-day moving average. And then this closer line here, if we zoom in, you can see this line here is going to be the 12-day moving average. So as you can see, /ES has been really strong for a long time. Really it bounced on, if you go to the 10-year weekly chart, you can see it bounced on this 200 moving average on the 10-year weekly. And if you start zooming in closer, you can see ever since that bounce, we've been like extremely strong. I mean, obviously there's got to be a pullback that's going to come. It can't stay at this steep of an angle forever. You know, obviously a big pullback is coming. Everybody's been wondering when it's going to come, and they've been saying it's going to come, and you know it had never come. So you know, I do think that we're reaching a point right now. As you can see, this is zoomed in here. You can see the 50-day moving average even zoomed in is quite close up. But this is the 200-day. This is the I think that was the 10-day 30-minute chart. So the 20-day 1 hour. As you can see, we bounced below it a couple times. We broke back above it. This 50-day moving average on the 20-day. Actually acted as a support for a while. We fell through, kind of bounced up. But I actually think we're pretty close to a resistance point right here. If we go back to the 180-day 4-hour, as you can see, we've been bouncing on it even on the 180-day. This is a 200 moving here on the 180-day. We've bounced on that as a support quite a lot, and we continue to rise. Right now it's still strong until we start a downtrend, which, you know, I'm thinking maybe below the 2750 mark to be a downtrend and start. What I would be looking for here is to break below this 200 moving on the 180-day, and then you know, try to recover and get rejected from this 200-day moving. That's what I'm going to be looking at for a downtrend in the market. As you can see, we're really close to absolute highs on the stock market. So this is a weekly chart, and we're starting out pretty much green this week, or consolidation green. It's almost like a hammer right now, but it's only Monday, so we'll have to see what Tuesday, Wednesday, and Thursday holds. But we could be reaching a peak right here, so I would be watching this to see what it does. So let's move on to the Nasdaq. Nasdaq is almost at absolute highs. The absolute high on the Nasdaq is going to be 77.28. We're currently at 76.57. So it's still looking overstretched. As you can see how it started out today and how it was last week. It's looking like a peak, which previous highs of the stock market obviously would be a good area for a peak to start a downtrend. So if we go back to the 10-year chart, as you can see, we reached a peak, we consolidated down, and then we pushed back up to the absolute highs. It would be a good area to have a pullback right here. So that's what I'd be looking at. Let's move on to natural gas. Natural gas is already dropped to 258.8. It is, I would think it's near a bottom. You can go back all the way to 2016. We were near a bottom around the 255, 253 mark. We're pretty close to that area right now. It'd be an area where I would be looking to invest, you know, try to invest longer term. Right now, I recently switched to TD Ameritrade, and I'm currently on the cash account. I'm switching it to margin, but right now I'm on the T+2 rule, and I'm on my last video, I talked about TD Ameritrade being a T+2 platform over Stock Trading Robinhood. I think I'm wrong on that. As soon as I find out, I'll update my video. But if I switch to a margin account and it allows me to trade, after I close a position, to open up a new position, which most people that I know are able to do, you should be able to do that on margin. So I've applied for margin with TD Ameritrade. I'm just waiting for it to get approved, and I'll let you know in an upcoming video if everything's working out okay with that. But natural gas generally trades between like $2.55 and $2.95, somewhere through there through the year, until natural gas is at extreme peak in the winter season. So we reached a high of $4.92 over the winter months, and right now, as you can see, like where that top resistance point is, around $2.97. We're currently about $2.58. So I kind of see this as a long-term swing trade, a good position area right now. We're currently trending down. Hopefully find some consolidation soon to have a reversal and a move back up towards the 290, 295 area. That's what I'm going to be looking at on that. So crude oil has been extremely bullish as of late. I know quite a few people who trade oil, and it has been extremely bullish since December, whenever it reached a bottom at $42 a barrel, and we reached a high of over $64 a barrel before doing another bull flag consolidation area to the right. As you can see, this 50-day moving average here has offered as a support quite a few times. We're currently right here at it, and it's been, even though it's consolidating to the right, it's still bullish. Oil is still bullish. As you can see from the pattern, it'll consolidate. It may get close to this 200 moving on the 180-day 4-hour, but it pushes right back up. As we hit it here and we pushed up, made some newer highs, we bounced on this 50-day moving average quite a few times, just slightly below it, and then we're making new highs, and now we're at the 50-day again. So the absolute bottom that I see on oil is going to be about $60, as you can see there. If we move down that low, that it'd be, I think, $60 right around that would be the bottom that I would see. If we move any lower than, we could see a bounce above 62.50 in a consolidation area up here before moving up, kind of like we did here. But if it does move down lower, I see about $60 being the bottom before validating that as a support and moving higher. So moving on to gold. Gold reached a peak, quite a few, it's almost been a couple months ago now. Time flies by, but $13.50 on February the 20th. And I talked about that maybe being the top then. And we've really consolidated down. 1285, 1290's kind of been a bottom support for gold. But we continue to make lower highs. So as you can see, 1350 there, 1323 there, and then 1315 here. So the market's really strong. If we do see this 1285 breaking towards the lower side, gold could go all the way down to the bottom again. So with the market being strong, if this 200-day moving average breaks, we could see gold moving on down to the 1200 range again. So it's kind of like what I see on gold. The market's really strong. As you can see, wow, on this chart here, it's going to be a 3-year weekly chart. You can see how weak gold is looking. So we had a long consolidation area here on the 200 moving average on the weekly chart, and it eventually broke down and continued to downtrend. As you can see here, we've had this consolidation area above this 200 moving average, and now it's kind of looking weak again. So we could move on down all the way up to close to the $1,200 level again on gold, before reversing. If the market sells off, if it's reaching a peak, and starts to sell off, we could see gold shoot up from here, kind of like here. So we had a peak here. We sold back off a little bit. We didn't completely reach this bottom here, and we reached the support, and then we popped back up here to the top. We could see a similar situation here, especially if one of my lights went off. I think we're still okay. You know, if we reach down here to the 200 moving, and you know the market starts to sell off, we can see gold pop up back up here to the top. You know, between the 1250 and 1270 level. So that's going to be the gold breakdown. Right now I see it as being weak unless the market starts selling off. Silver should be in a similar situation. Silver has been you know, a slow downtrend for quite a few years. If you go to the 1 year, this is the 1 year day chart. We sold off all the way to 1386, and we popped back up to around $16 an ounce on silver. And then we've slowly downtrended again. So the silver market is currently in the downtrend. So it's kind of like where I see that right now. Kind of like with gold, if we see the overall market start to downtrend, then you could actually see these pop back up. We kind of talked about this before, where this 200 moving average here normally gets slightly hit. So if the market starts selling off, we could see silver, you know, possibly reach about the $16.50 an ounce. So that's going to be pretty much it on the breakdown. I think we covered S&P 500, we covered the Nasdaq, we covered natural gas, crude oil, and gold and silver. If you got any questions or anything, just leave them down in comments. You know, my name's Ryan. I do the stock market. If you haven't subscribed to the channel, you know, you can go ahead and do that. Hit that bell notification to be alerted whenever we do release new videos. I enjoy the stock market. I'm more of a swing trader. I still work full time, but it's one of the things that I really enjoy doing part time. And my wife Sam does affiliate marketing. So if you're interested in making money from home, whether it be the stock market or affiliate marketing, that's kind of what we do. So we look forward to having you with the group, and that's pretty much it for this week's breakdown. It's going to be April the 15th. So I enjoyed doing the video for you. If you enjoyed the video, leave us a thumbs up, and we'll see you in the next video. Take care.